Nobody. I don't care if you're Warren Buffett or if you're Jimmy Buffett. Nobody knows if the stock is going to go up, down, sideways, or in fucking circles. Least of all stockbrokers.
Hey everybody, it's Lawrence from FinancialThing.com. Today, coming with a portfolio update for the Trading 212 5,500 pound stock picking experiment. Today is Monday, October the 26th. I'm a little bit late with this video, but better late than never. And we're going to go ahead and do an update. If you remember last week, we were up about 11%, up about 613 pounds on the portfolio. This week we've seen a little bit of a drop, and I have made a couple of changes to the portfolio after thinking about things a little bit more in depth as to what I wanted to hold in the portfolio for the next year. So I'll go ahead and show you that. Please, if you haven't already, go ahead and subscribe to the YouTube channel. It helps me out a lot. And also hit that like button and leave a comment down below. So let's go ahead and get right into it. So looking at the portfolio this week, right now it is during live trading hours, so you will see this number fluctuate just a bit. But we are currently up on the entire portfolio about 8.29%, which is down about 3% from a week ago Friday when I recorded the last video, where again we're about 613 pounds in the black in profit. Let's go ahead and run through the portfolio and we'll go ahead and see what changes we made and where the different shares are sitting right now. So first of all, the changes that we made this week were I actually sold AT&T. I was thinking about it, and AT&T is a great long-term prospect for high dividends. I was paying about 6.5–7% of a dividend annually, but as far as a growth stock, AT&T has just not been very good over the years. And I was thinking about, do I really want to hold this stock for the next year in this portfolio? And I decided not to. So we went ahead and sold that. It was pretty much a break-even play, didn't lose anything. But because we were holding the stock during the ex-dividend date, if you're holding a stock during an ex-dividend date, you actually get paid the dividend even though you don't own the stock anymore. So I was holding it then. We'll receive a little bit of a dividend payment on that AT&T stock in the next couple of weeks. Probably nothing significant, maybe $10 or $15. But that will help out the portfolio a little bit. So I went ahead and sold that. And this week we went ahead and picked up Blackline and also JP Morgan Chase. And I'll explain a little bit more as to where those changes came from and why we made them when we go through the portfolio. So today we are seeing a bit of a negative run on this AbbVie share. Again, this is a dividend play. It's currently running 7.38% in the red. Alphabet and Google continue to perform well at 10.36%. Alteryx here, you can see, is still up 25.11% overall in the portfolio. It's one of the shares that has really been propping up this portfolio and doing well. Apple, small gain, 3.7% total for the start of the portfolio. Blackline, again, this was something that was purchased last week. And right now is running 5.6% in the red, so not off to a great start. That did come from the Motley Fool share picking services. Blackline is a cloud-based accounting company that serves larger businesses. They're about a $5 billion market cap company that has some growth potential in there, so I thought it would be a decent addition. But again, we only picked up 2.7 shares of Blackline, so it's not really going to impact the portfolio in a massive way. Going on, we've got DocuSign here that is relatively flat, only up about 0.46%. Etsy continues to do well, 17% in the green. Fastly is our stinky loser of a stock that we have in the portfolio, down 18.79%. Thankfully, I only have a couple of shares of Fastly, but decided to kind of hang on to it. I don't think it's a share that I'm willing to just cut and run from at the moment. So I think, especially after the U.S. election, you might see a big uptick in Fastly's recovery. Then we added again JP Morgan Chase this week, the big bank. I think there's a lot of growth potential. They are down quite a lot since COVID happened. You can see up here they were trading at their highest point on December 23rd, 2019 at $143. Today trading about $100. So I think there's some growth potential there. And they do pay a nice dividend of 3.4 0.47%. So they'll go ahead and add those to the dividend portfolio pie. Next up, this is the really surprising performer for me, was the Lloyds Bank. We're up about 17%. Purchased that in the mid 20 pence range. I think it was about 25 pence when I bought them, now up to 29 pence. Again, I think that there's some real growth opportunities there for Lloyds Bank just because the stock price is so depressed at the moment. Pays also a dividend yield of 3.82%. So that's doing very nicely. Logitech, we had a good earnings report for them about a week ago. They're still performing well, up 10.4%. Yeah, Logitech has performed well. You can see here it was in the $80 range. And then they had that good earnings report, which bumped them right up to $94. And you've seen a bit of a drop off since then, back down to 86, but still in the green at 10.35%. Still a share that I'll continue to hold, as I'm quite a fan of the Logitech company. Continuing on, we've got NextEra Energy, which is still 6.28% in the green. And Salesforce relatively flat, down 0.3%. CN Limited up 6.22%. Shopify up 7.74%. We got Tesla, which is up 7.23%. And Trade Desk, another share that's holding up the portfolio quite nicely at 28.3% in the green. But we only have just over half a share of Trade Desk, so it won't impact the portfolio. Let's go ahead and look at the pie and see how the dividend pie, and this is just the shares that pay dividends, are doing. Right now we're up 6.82% on the dividend pie, which holds Apple, JP Morgan, Chase, Logitech, AbbVie, Lloyds Bank, and NextEra Energy. So yeah, the portfolio is continuing to perform in the green. That's what we want to see. And I'll go ahead and show you how it's doing compared to my trusty Vanguard US equity fund this week. So here's the updated results for this week. With the stock picking portfolio, September the 25th until October the 26th, 2020, we are up 8.29%. So still doing relatively well overall. And the Vanguard US equity tracker is up 1.36% between the same dates. Totally expect that over the long term, those results will start to even out. But right now, the stock picking portfolio is performing quite a lot ahead of the index tracker. So that's going to do it for this week. I'm not going to do another update on Friday because I'm taking a holiday. So the next update is going to be on the week of November the 2nd. We have the US election on November 3rd, so I expect some kind of volatility in the markets for that week. So it's going to be very interesting. Hope you enjoyed the video. Please, again, don't forget to subscribe to the YouTube channel and hit that like button. Please leave a comment down below. And thanks for joining. We'll see you next time.